Hello investors, welcome back to the channel. It's Mzansi Investor. I know that it's been a while since I last uploaded a video on the YouTube channel, but I was busy with some other things that are going on in my life. This includes updating the other YouTube channel, Trend Trader, because that is where I actively trade stocks. Now I've started trading other things as well. But in this channel, Mzansi Investor, as I mentioned before, I'll be using this channel to track my journey towards financial freedom or financial independence using dividend investing approach. I still trade shares, like buy and sell shares. So that is what I've been busy with since the last video. And today I want to give you an update on some of the investments that I've either made before I created this channel, or some of the investments that I made in Q1 of 2021. So some of the stocks will include the stocks that I bought sometime last year, but that I'm still carrying in my portfolio. So yeah, let's just dive into those stocks. In terms of the dividend yield, I've tried to, as I mentioned in the second video, where I was highlighting the pitfalls of dividend yield as a matrix for picking dividend stocks, was that if the companies have been performing poor, then in terms of share price, the share price is lower. Some of those companies, if they were not generating enough profit, either because of COVID-related issues or just because the companies were in some other forms of distress, so meaning that those companies, they were not paying a dividend. Therefore, the dividend yield of that specific company is going to be zero. But now some of the companies are starting to recover in terms of share price. Hopefully, the underlying businesses are also growing as well. So now we will see some companies that have a dividend yield that is less than 2. Some have a good dividend yield. There are some companies that has high dividend yield because the last time they paid a dividend or a distribution, the share price was high, and then the share price continued to trade lower. So now the share price is at a lower level, therefore the dividend yield is higher. And in fact, you'd be surprised that maybe a company that has a dividend yield of about 7 or even 10, they'll just say that they're going to struggle to pay the dividend. For example, Redefine, it's one of the property companies that said that they might not declare the distributions because they have operational challenges. But if you look at a company like, I think it was Hyprop Investment, initially they said the same thing, that they might not pay the distribution because they're struggling financially. But the JSE group, or we'll just say the JSE, it sort of forced them to pay the distribution. So they paid the distribution, and then there was also a special dividend. So yeah, if you use the dividend yield alone, you may find companies that may not pay dividend the way that you expected it, or perhaps find companies that are struggling in terms of share price because the operations are also struggling as well. So let's just look into some of those companies that we will be covering today. So I'll just go to the PC. Okay, so if you look at this on this spreadsheet that I use, it's on Google Sheet because for the current price, it's easy to get the prices updating automatically, therefore updating the portfolio. So if you look at this spreadsheet, we've got a list of stocks that I own in my dividend portfolio. These stocks are I'm trading them on the EasyEquities account. Just the normal South African rand account. On the side there is the US dollar account because I shifted it away because I want us to focus on the South African rand account. So in this table, you can see that there is a ticker. The ticker is different from the JSE code because if you want to pull the data from Google Finance, then you have to use a specific ticker. So the ticker that you use there, it must have that JSE to illustrate or to show that you want data from the JSE JSE exchange or Johannesburg Security Exchange. Yes, the JSE, to show that you want it from the Johannesburg Security Exchange, not from any other exchange. And then the JSE code, if you want to pull the dividend yield data, I think I'm getting that information from MoneyWeb. So MoneyWeb does not want that JSE prefix. So that is why I have the ticker and the JSE code as well, because I want to be able to get the live share price so that I can update the current price automatically. But also I want to get the dividend yield as the share price changes, or if and when MoneyWeb updates the dividend yield of a specific company. So now from this list, you can see that we've got different companies from Old Mutual all the way to Woolworths. And then these companies have different dividend yields. And then what I also included is the entry price. The entry price is when I bought these stocks into my portfolio. The entry date, it updates automatically. As you can see, everything is showing that it was bought today. That's because I updated this table today, because I wanted to present this information only. Yeah, but if I were, every time when I buy a dividend stock, then it will put in the correct date, because I just have to add the ticker there, then automatically it will put in the date of when I bought that. And then the entry price, I have to put it manually. And then the current price, as I said, it updates automatically. And if you don't divide it by 100 cents, it will just put that in cents. But now I've changed it so that it updates the prices in rands, because, well, we use rands. And then finally, in the last column, we have the return on investment. So basically, in this case, the return on investment is the current share price minus the entry price. Then it calculates in terms of percentage if I've made money or if I've lost money. So I've done some conditional formatting so that anything that is greater than 0%, implying that I may have money from that, at least paper profit, it shows as a green. And then if it's below 0, then it shows as red. So now the stocks that I have on my dividend portfolio, I'm just going to list them one by one. Like I have Old Mutual, Woolworths, Sibanye Stillwater, Cash Build. I've recently added Remgro. Then I've got Advtech, I've got Alviva. Well, because I do technical analysis, some people might say, but Alviva is probably not a dividend stock and all those things. The stock has a dividend yield. It's there. It's making me money, so I'm happy with it. And then I've just added City Lodge Hotel. Also have Distel Group. I've got First Rand Limited. I've got Hemerson PLC. I've got Imperial Logistics. I've got ShopRite. Most people have ShopRite in their portfolio, but maybe it's because it's a good company. So I have ShopRite as well. And then I have a Telecom Group. And then finally, I have Woolworths. In my overall portfolio, I have more companies, but the companies that are presented here, it's the companies that have a dividend yield that is greater than 0. So in my other portfolio, in my EasyEquities South African Rand portfolio, I do have companies that have a dividend yield of 0. Like I said before, the dividend yield is calculated by taking into account the dividend that was paid for that full year, the interim and the final dividend, divided by the share price. So some of those companies, they didn't pay dividend either in the interim period or in the final year. So now if their dividend was 0, the dividend yield automatically becomes 0. So I've checked out all those companies and only brought in the companies that have a dividend yield that is greater than 0. And then if you look at the dividend yield column, you will see that some of the dividend yield are highlighted in green. So the reason for that, let's go to the Reserve Bank website. So under here, capital, okay, not capital, it's inflation consumer price index. If you look at the CPI, the one that is available on the Reserve Bank website, was last updated in February 2021. At that time, the inflation was about 2.9%. I don't recall what's the current inflation rate, especially for March. I don't know how often they report it, but if I were to assume that they report it on a monthly basis, so I don't know what's the inflation rate for March, because now we are in April. But the one that is reported for February 2021 it's 2.9%. And then something else there, okay, we see the repo rate, it's about 3.5%. The prime lending rate, it's about 7%. Ideally for me, I would like to have stocks that have a dividend yield that are at least greater than the repo rate. But my sweet spot, it's stocks that have a dividend yield that is greater than the prime rate. But as we know that the GSE hasn't performed very well in the past 5 years or so, it's not easy to find those companies. And also, I use systematic trend following. So I don't want to buy a company just because it has a higher dividend yield, whereas the share price is stagnant. I'll prefer to have a company that pays dividend, but also the share price must be appreciating, because I want to have the best of both worlds. I want to enjoy the dividends if and when they come. At the same time, I also want to enjoy a capital appreciation. So the way that I've highlighted the dividend yield there in that spreadsheet, it's every company that has a dividend yield that is equal or greater than 2.9%. So that is why some of them are highlighted and some are not highlighted. So of the ones that have a dividend yield that is greater than 2.9%, we have Sibanye Stillwater, which recently paid dividend before the end of March, if I recall well. Sibanye has a dividend yield of about 5.1%. And then we have Cash Build, which also paid somewhere in March. The dividend yield is 3.25%. And then we have City Lodge Hotel, which in terms of share price wasn't doing well for a very long time. I don't think that they will be able to pay dividend in the next time they report result, unless if they've already reported result and maybe I missed the dividend payment there. But City Lodge has a dividend yield of 7.06%. And yeah, those are the only companies that have a dividend yield that is greater than the February inflation rate that was reported. The rest of the companies have dividend yield that is greater than 2.9. But at least if a company has a dividend yield that is greater than 2, it's okay-ish. They will be paying a dividend. For example, we've got Old Mutual there, has a dividend yield of 2.6%. We know that on the 24th of May, Old Mutual will be paying a net dividend. I think it's a net dividend yield of, not dividend yield, net dividend of about 28 cents. I think the gross dividend is somewhere around 30 cents or 40 cents. Then you have to subtract that 20% dividend withholding tax, and then you get that net dividend between 28 cents and 24 cents. That's how much they will be paying on the 24th of May. So yeah, some of these companies will still be paying dividend. And then in terms of performance, that for that we are using the ROI, return on investment, as calculated as a percent. So the only stock currently that is underwater, it's City Lodge Hotel. I will show you why it's still underwater, but most of them, at least, even though there are some that are sort of not having done very well for some time. For example, 2% is not that great. So I think the one that I can say they've performed betterish are the ones that have a return on investment that is greater than 10. So of those, we have Cash Build. Cash Build has performed well so far. We bought Cash Build at 195 rand per share. It's currently trading at about 306 rand per share. There were times where I think it reached about 320, 330 rand per share, but then it keeps on going up and down. And one of the other best performer is Advtech. As some of you know, okay, Cash Build, it's a hardware company. Advtech, they own private schools and private tertiary institutions. Under private schools, what's the name of the schools? Well, it's not Curo, but they do have schools in their banner. I think Cambridge, is it Cambridge? Well, I forgot the name of that school, but they have private schools. And then also they have Varsity College, I think it's Varsity College, and the art tertiary institution, Vega, it's under Avtech. So those ones, that one have done very well. It's up 47%. Cash Build is up 56%. And then you have Alviva. Alviva, it's a ICT company. The other name for Alviva is Pinnacle. So I don't know when it changed, but yeah, if you want to get data for that company, you have to use the share code Alviva. Pinnacle is no longer recognized in the exchange. So it's also up 44%, and then City Lodge is down 5.29%. And then the other better performer is Hermesin. Okay, at this moment Hermesin is up 11%. This one, in terms of share price, it's too volatile at this moment, but it currently has a return on investment of 11.82%. Tomorrow it's a trading day. Anything's possible. It can be lower, it can be higher. And then the last two, we have a ShopRite Group, which has been on an up and down, but it's nicely on an uptrend, and they paid a dividend last week, but we're not gonna include that dividend because we want to cover dividends that were paid before the end of Q1. So ShopRite is currently up 21%. We got in at around 122 rand per share. It's currently trading at about 148 rand per share. And then the last one that is greater than 10% is Telkom Group. The dividend yield for Telkom Group is 1.23%. We got in at around 31 rand 70 cent per share, and then it's currently trading at 40 rand 56 cent per share. So far we have a spread from one loser, Citigroup, a couple of stocks that are below 10% in terms of rate of return. Then we've got companies that are greater than 10%, and a few that are closer to 50%. We have companies that are greater than 100%, like ArcelorMittal and PPC, but those companies have a dividend yield of 0, so we are not showing them here. So as you know, I do a lot of technical analysis. That is what the other channel, Trend Trader, you can just check its name there at the top. It's the featured channel. In this channel, Trend Trader, we have videos that we upload regularly. Sometimes it's every week, or at least once every 2 weeks. We do stock analysis using technical analysis. So I'm very big on chart. In fact, before I even make a decision to buy a stock, I first look at the chart, and then because on TradingView I can use the dividend yield as a screen. Then first the stock must meet the technicals, then it must have a certain dividend yield for me to consider it for my dividend portfolio, even though I just check everything in one EasyEquities account. So the first stock that I want us to look at is Old Mutual. By the way, the technical analysis of these companies is available on the other channel, as I've mentioned before, because it's different videos. You'll find different companies in different videos, but when I edit the video, I will try to link a specific video for the analysis of that company, right? So the first one that I want us to look at is Old Mutual. So I mentioned before that the stock, before I can invest it, it must be trading above the 200-day moving average. So when we look at the chart of Old Mutual, there was a time where it attempted to break above the 200-day moving average here. This was the attempt here. So we bought Old Mutual here. It went up a bit, giving us a bit of some profit and false hope, and then it crashed. It came back to trade below the 200-day moving average. Then we exited the stock, and then it came back. This time it didn't just break away this, it sort of consolidated a bit. So we waited during this consolidation, and then when it broke above decisively, then we bought. So the position that we have now on Old Mutual, it's a recent position. It's not the original position that we took somewhere around February 2021. But in terms of the chart, the stock is trading above the 200-day moving average. So we are happy to hold it. The price is greater than the 50-day moving average. It's also greater than the 200-day moving average. So we are very much happy to hold this stock. Okay. So the other stock that we have there, it's Remgro. Remgro we've just added recently. So we have a video on Trend Trader. The latest video covers a Remgro analysis. So as you can see here, Remgro formed this. This is a cup and handle formation. It's a bullish signal for those that are familiar with chart patterns. So a cup and handle is known as a bullish signal. Once the share price break above the neckline of the cup and handle, then we expect that share price at least to trade equally to the bottom of that cup and the handle and the neckline. So the short-term target here in this case is somewhere around 150 rand per share. Well, we're not saying that the stock is going to reach 150 rand per share. We don't know. If there are buyers buying the stock, there's a demand for the stock, then the stock can reach 150 rand per share. But if it doesn't reach it, it doesn't reach it. For as long as the stock is trading above the 200-day moving average, we will be holding our position, receiving those dividends, reinvesting those dividends in these companies. At least now on social media, there is this DRIP concept, dividend reinvestment plan, DRIP. So every time when you invest for dividend, for financial freedom or financial independence, don't forget to activate the DRIP on your portfolio so that every time you receive dividends, the dividends are reinvested from the same companies that paid that particular dividend. So yeah, Remgro has a nice technical. We are happy to hold the stock. The analysis is there. Our medium target or mid-term target, it's somewhere around 150 rand per share. But we're not saying that the stock is going to reach 150 rand per share. And then we also, let's look at a City Lodge Hotel. So as we said, that this stock has been depressed for quite some time. As you can see, it's been struggling to break away this resistance level, of which it did, but now it's currently below this 200-day moving average level here. This is the 200-day moving average that is acting as a point of resistance. So now let me zoom in a bit. Okay, if I zoom in, it removes that drawing. But what you want to see, you want to see City Lodge trading above the 200-day moving average once again. We already have a position here. The stop loss hasn't been hit yet, so that is why we still have a position there. But should it fail to go up and then continue to trade lower, then we will liquidate our position, come back to cash, use that cash to buy other dividend paying companies. So as of today, if you don't have City Lodge Hotel as yet and you are willing to be patient so that in terms of technicals, the stock meets the criteria, then you want to wait until a City Lodge Hotel is trading at least at 4.50 cents per share. Then you can buy a City Lodge and add it into your portfolio. And then the final stock that we want to look at, we mentioned that we have Mzansi. As you can see, let me clear this drawing. So this one, we held it, we waited for the stock to trade above the 200-day moving average, of which it did here. There was a bit of volume. So when you buy, we do price volume analysis. Then we can add other components. We don't buy stocks without doing the price volume analysis. So when the stock broke out this level, it did it with a bit of a volume here, so we're happy. Then it came back to retest this level, and then it started to trade higher, reaching somewhere around 9 rand, which was exciting, except that that excitement was short-lived as the stock quickly pulled back and then it traded below the 200-day moving average. But the following day, it started to come back and then back above the 200-day moving average. So far, it's trading there nicely above the 200-day moving average. As you can see, there's that consolidation there. So what you want to see, the ideal scenario is that it break above this level and then it come back to the 9 rand region. Hopefully it want to consolidate, that it just break and then continue to trade higher. But the other scenario that can happen is that it can come back to touch this level. Hopefully, eventually the 50-day moving average will come and then close above the 200-day moving average. Then that's another buy signal for some people. But if it does that, if it does retrace here, we hope that it will find support and then it will come back. Well, we don't know how long it will play this sideways move, but eventually the stock may start to trade upwards, especially if the fundamentals of the company changes, or just the global fundamentals of business. The company is doing okay, there's demand wherever they are operating. For us, it's technicals first. We focus on price volume analysis. If we're happy with that, we're happy with price volume analysis. The rest of the other stories are just gonna fix themselves on the side. So yeah, that's it. These are the four stocks that we wanted to cover. It's Hemerson PLC, Remco Group, City Lodge, and Old Mutual. If you go to the Trend Trader YouTube account, you will find analysis of all these companies. So yeah, just to sum things up, we've got about 13 stocks that have a positive dividend yield, meaning that the dividend yield is greater than 0%. Some of those stocks have a dividend yield that is greater than the consumer price inflation, of which we are happy. It means that in terms of dividends, we are not losing some money. Well, economics is a bit complex for us, but we hope that we are not losing money if we have a dividend yield that is greater than the inflation itself. And also in terms of share price appreciation, as we showed here, some of these companies have done very well. They've returned over 20%. Well, 20% is not a lot if you consider that we've just had PPC, ArcelorMittal, and a lot of other penny stocks that are up in the north of 100, 200%. But for these large companies, most of them are large companies that are able to pay dividends. Anything that is greater than 20%, it's sort of okayish, especially if you take into consideration how much the all share index or the top 40 index has returned year to date. Then so far we are doing okay, we are happy. So yeah, we hope that you enjoyed this quarter one dividend portfolio update. If you did, please give this video a thumbs up, and if you enjoyed the content of this channel, please click the subscribe button and click that bell notification, so that whenever we make another video, you can get a notification so that you don't miss the update. But the goal is still the same. We are still chasing dividends so that you can reach the ultimate goal of financial independence and financial freedom. Once again, this is not financial advice. This is just me sharing my stock portfolio or my dividend portfolio. Everything else that concerns financial advice, anything along those lines, you need to discuss it with a professional, somebody who's going to give you the proper advice. For this, it's just for the stock market with shares chasing dividend yield. In this portfolio, I don't have ETFs. I have my ETFs on my tax-free savings account. Even there's not even a lot of ETFs, because, for example, if you buy a top 40 ETF and then you buy maybe an industrial ETF, same companies that are in the industrials are the same companies that are in the top 40. Well, majority of them. If you look at the top 10 composition, if it's the same, then really you are not that diversified. Of course, the top 40 and the industrial ETF are not going to perform in the same manner, but just make sure that when you diversify, you don't over diversify, because in the end, that diversification thing, it cancels out everything. It makes it difficult for you to beat the market. The market can be beaten, whether you believe that or not. It's okay if you've never beaten the market, it's understandable. But the market can be defeated. A retail investor like me and you can beat the market. You can beat the market. It's okay if the professionals, they tell you that you can't beat the market. If we're also investment professionals, there are ways. For instance, in terms of asset allocation, those people, they specialize in that as well. In this case, we are just discussing a smaller component of investing, which is share investing. If a professional tell you about putting some money in gold, bonds, and all the other stuff that they invest on, it will have a different effect. You might get the average return, which will give you the impression that the market cannot be given. But in the context of the stock market, you can beat the stock market. Yeah, in that context. So let's continue to seek alpha if we are getting alpha in that sense. But we will see each other on the next video. Once again, don't forget to subscribe, like the video, and click that bell notification. If you like this content, maybe share it with other people who might find it useful. So thank you.